Welcome to the Tuesday edition of the CLBA webinar series. We appreciate you guys being here on a Tuesday afternoon. We have two great lenders lined up this afternoon. The first being Libertas, the second being Unlox. Both are great lenders, and you're going to get a lot out of the presentations this afternoon. First, the webinar series is brought to you by RCN Capital, the leading nationwide wholesale lender of real estate investments. Second, we're doing our first workshop of the year tomorrow. If you guys are interested in joining the workshop, shoot me a text message. Let me know. I'll get the information over to you. But I'm pretty sure you guys seen all the marketing and advertisements that have been going out about that. Second, March 17th. Not only is it St. Patty's Day, but we are opening up registration for the conference, which is November 2nd through the 4th this year in Indianapolis at the JW Marriott. So we're pretty excited to get that kicked off. We have a bunch of new things going on this year that we'll be making announcements shortly over the next couple of months, but there's going to be some really cool and exciting things that are going to be coming up for everybody. With that said, I am going to be introducing you to David over at Libertas. David's going to be presenting Libertas this afternoon and talking about the capabilities and what they can do. David, thank you for coming on today and presenting Libertas.
Great, thanks, Scotty. Really appreciate it, and it's great to be back with the CLBA. It's been a few months since we were down in Orlando.
Yep.
Wish I was back there now. Actually, though, we did get to 35 degrees here in New York today, so we're inching. But thank you, Scotty, for the warm introduction. And thank you everyone for taking the time today. What I'd like to do is, I have a presentation here. I may go off cuff a little bit. We can also share this presentation with you guys after the call. Anyone that wants can reach out to me. I'll have my contact information. And I just want to thank you all for already, being great partners. We've been able to get some deals done with some of the folks in the CLBA and really just having some great conversations and, forming some partnerships that are, going to be valuable going forward here in 2026 and hopefully beyond. I wanted to introduce Libertas. Some of you may know us, some of you may be looking for more information and see where we can fit in and really fit into, a client's, capital stack so we can help you win more deals. Libertas is a national commercial finance company focused on providing growth capital to establish small and medium-sized businesses. And we've been doing it since 2016. Our platform has deployed over $5 billion and is operating at a run rate of about 1.4 billion from last year. So we've done 5 billion in under 10 years. So definitely some impressive growth. And what makes us a bit different is the blend of institutional credit with alternative finance execution, speed. We like the larger transactions, going from as low as 150,000 to up to 10 million, and we've even done a little bit more than that, 12 million. So you can start to think bigger here with us. We're not your typical MCA company that's doing 50, 100K deals. So nothing against the small business owner, but it's just not our model. And I think that you'll start to see where we can fit in. Most of the clients we help are really good companies, real revenue, real opportunities are in front of them. They might be waiting on a bank. They might be outgrowing their current facility or need to move faster than traditional lenders can. That's where we can come in. Often a bridge that helps capture the opportunity now while positioning them for a cheaper, more permanent capital later. What I want to do today is walk you through, some of our products, credit profiles, some scenarios, and show you where we can be, most competitive. The structuring of our deals is traditionally not just weekly, but also bi-weekly and monthly payments. You'll see, these daily and weekly payments. We understand that companies are looking for better. So like I said, we often will offer a monthly or a bi-weekly if the deal, fits those merits. We're funding in all 50 states. Scotty and I were just talking about, you guys probably hear, about Texas and lending in Texas. We are backed by a partner bank, a web bank out of Utah, so who is a chartered bank. So we do deals in Texas on that platform. That program actually does allow for an SBA takeout. It's written as a BLSA, Business Loan and Sales Agreement. So I know a lot of the folks on the line, do SBA's loans. So reach out to me if you have scenarios where someone's looking for that capital quicker then that 60, 90 day window that the SBA takes, we can come in, within a week's time, sometimes a couple of days, and be taken out by the SBA. So I think it's really important to understand that, and that's how we can win deals in that scenario, of course. Most of our deal flow, I got to be honest with you, is coming from referral partners and really close sources. So I think that you guys as a group really fit that network really well. We do renewals quite a bit for customers that come back. I think the average customer comes back about 3.5 times. We compensate you the same amount of commission on a re-up or renewal as on a first-time deal. So please keep that in mind as you're building a book of business. And we're going to treat your clients, very well. I think it's important that you understand our underwriting is a bit different. We underwrite the business, not just bank statements. Of course, we're a cash flow funder, so we need to get to banks and see the revenue and make sure there's no real issues with the cash flow. But we have to really also look at other things, the trajectory of the company, the management quality of the company that we're investing in, and what the capital will accomplish. We'll look at some financials. We're really interested, and we've taken a liking to really hearing the story, growth stories, acquisitions, expansion, not just survival type of funding. Of course, you're going to have instances where a company needs capital in a pinch and they need it quick, and we'll be there, but we want this to be thought of as, like I said, entrepreneurial growth type of funding. I mentioned before, and I think it's important though, we from a compliance standpoint, we're very buttoned up. We have a relationship with WebBank on our term loan program. That product goes out up to 2 years, so there's some flexibility there, and that's often where we can do bi-weekly, monthly payments, and really get a bit creative in our evaluations. We're fast, we're fair, and I would also just like to say that I've been with Libertas since we started about 9.5 years ago as a day one employee, and seeing the growth here and know how to navigate our system from an underwriting perspective to a broker perspective, a referral source, to talk to a client, reach out to me, see what I can do, see how I can help you. I want to be your coach, your advocate, if you will, to get deals done, and we can win together. So, please keep that in mind. I think that, I just want to go through a couple of slides here. This is a whole list of capital uses, and I think this is an important slide for you to start to think about your book of business and who you guys are working with and how they may be able to use our type of funding. Our cost of our capital is not cheap, but it's, the speed and the precision of it is really of great value. So we could talk pricing and rates and the relativeness of how quickly you can get capital into someone's hands. And when I say we're not cheap, we're also not nearly as, call it, expensive as some other, MCA type of companies. So we're very fair with our pricing. But general working capital is obviously a use for funding. We do, like I said, we can get involved in acquisitions. For example, somebody needs $10 million. They're putting in $1 or $2 million of their own money. They have a seller's note for a couple million, and they need another 5 or 6 from Libertas. Now they have to have the revenue and the EBITDA and the net income to support that, but that's another place where we can get in on the capital stack. So start thinking of things in those nature. Certainly, bridge type of financing, inventory, any type of marketing, infrastructure needs. There's a lot that can be done there. We added a couple of recent success stories so you guys can also see and get a feel for that. We funded an architecture and design company $5.5 million last month. A little deal summary here. I'll just read it to you. Libertas supported a $5.5 million growth capital solution for a leading architecture firm specializing in ultra high net worth residences. This funding facilitated their geographic expansion beyond New York City into the West Coast and key luxury markets. By delivering a more flexible solution than a traditional line of credit, Libertas helped the firm successfully scale its brand footprint. So I know there's a lot of real estate folks in and around the CLBA, so there could be some plays there as well, how we can help. We funded a mechanical contractor, $2 million, just to summarizing that one, supported a $2 million growth capital solution for a leading Northwest-based HVAC company. This funding served as a strategic bridge, to a larger credit facility, providing the immediate agility needed to execute geographical expansion and infrastructure upgrades. By delivering a more flexible solution than a traditional line of credit, Libertas helped them, scale its regional footprint and service capabilities. So you can start to see, things of that nature, how we're executing there. I want to go through, just jumping around to some of my slides, some of the programs and the features. As I mentioned before, we can go up to 10 million, even 12 million in certain scenarios, and even 15 million. We have one program called RBF, revenue-based funding, another program called a term loan. And here are some lists of some of the general traits. I will just walk you through. Minimum credit score 630. Time in business we have here is 3 years. Having said that, if somebody has acquired the company and the company's been around a lot longer than that, and they've only bought it for, call it a few months or even a year, we can still look at those scenarios. I actually have a call after this with a company that had a purchase and sale January 6th or 16th, and they're coming to us looking for $1.3 million. I actually think that's just for working capital. They're not looking for us to do the acquisition, but we can help with the acquisition, assuming they put some skin in the game. So those are scenarios. And if you come to me, it's someone that's doing a lot of revenue and is making good profits, we can make exceptions for less than 3 years, probably 2.5 years. Our revenue-based program does not come with a true personal guarantee. It's more of a performance guarantee that has the ability to turn into a PG if and when somebody, I don't like to use the F word, but commits fraud, if you will. So they maybe change the bank account on us, deviate the payments, do something that is unsavory, and then we have the ability to go after them. Our term loan program, which I've touched upon, that has the ability to go out to 2 years, sweet spot probably more like 18 months. We do ask for a PG on that. Having said that, you may come across some ownership situations where there's a diluted ownership and there's a lot of shareholders, and the deal makes sense and we want to do the deal. We can do corp only guarantees in certain situations. As far as filing here, we do try to file UCC. If we're going behind somebody and we need to get an intercredit agreement on some of these larger transactions, we're willing to do that, and we think it makes sense to do that. There are instances where we won't file UCC, only if a customer starts missing payments and not communicating with us. If we like the deal enough and there's a comfort level, or like I said, we'll file UCC and be a position behind more traditional debt. And we do look at financials, but we have an app-only program that's basically banks an application for $400,000 and less, what we call our AA program, that will essentially be up to 14 months or less, of no additional stipulations if the credit is above, say, 700 and 5 years time in business, and the pricing is pretty fair on those type of deals. There's always underwriting discretion depending upon the industry. If it's a construction company, they may still ask for like an AR report. But if the company is looking for above that amount, usually say above 350 to 400, we will ask for financials, year to date, tax return for the most recent year, depending upon the company, an AR or maybe an AP report, but not necessarily needing the AR, AP up front. We are very open to doing phone calls with companies if we like to file and we want to learn more. We'll have a very much an approach to listening to the story, like I mentioned before, a little bit of an old school underwriting approach, not just an algorithm, if you will. I think an important thing is, just to understand that this is non-dilutive type of, financing. We're not asking or taking any kind of equity. We're almost industry agnostic. Of course, there's going to be some industries that are a little bit tougher, like trucking. We still fund trucking, but it's got to be $750,000 a month or more. So, start thinking like that. Even like auto sales is a tougher industry, even some construction. But we can talk more offline about the specifics in and around certain industries and what we require to get an approval and ultimately to funding. The speed is, quickly. Someone comes to me looking for $1 million and they're ready to go. They're sold. They have the program. In theory, we can get them in 24 to 48 hours the money. They're looking for 5 million in maybe 2 to 3 days. And then anything about 10 million can take up to 4 or 5 days just for us to go through it and make sure that we're comfortable. We'll visit companies when we give them over $4 million or more. I think another thing to mention, and really a way that some of these bigger, lower middle market companies are using us, is that bridge. And in that sense, where we can be repaid on a prepayment, no penalty. Actually, we entice a discount for half the term. So if we're doing a 1-year term, we'll call it a 18-month term. We want to give them, 6 months to 9 months. We'll give them prepays on a table that allows them to pay us off at a discounted factor rate, and it can get pretty, inexpensive. It can be on the first couple months, single digits, and then to the low teens. That the cost of doing business is a lot less than them going to a full term. So I think that's a really important thing to take away. If you know somebody that's going to be getting capital within, call it 30, 60, 90, 120 days, but they need or have a use for working capital sooner, that is where they should really start to think Libertas and think, hopefully entrepreneurial. I'm just gonna, move along here. I'm gonna introduce, to some of our senior team here. Gary Katcher is the chairman of Libertas. He's the founder and executive chairman. Gary has over 30 years in financial services. He was one of the biggest loan brokers at Morgan Stanley. Excuse me, not Morgan Stanley. He was at Royal Bank of Canada, Merrill Lynch. I got myself a little mixed up. I apologize, Gary. He'll forgive me, hopefully. But you can see he's been in around finance for a really long time, and he's the leader of our company. Randy Salick, who was the CEO, Libertas, has now moved up to our vice chairman. He was CEO from 2017 to 2025, board member. And Randy went to Wharton. He also is a lawyer, so he can help, from that standpoint. And as of recently, we brought John Paradisi on. John came to us in April of 25, and January 1 of this year. So just obviously about 5 weeks ago, he took over as CEO. John's coming over from City National Bank of Florida, where he really grew that to 17 billion to 27 billion. And he also was at CIT Bank in New York for 17 years. And he's actually moving his family, as he likes to joke, back from Miami to New York. And he doesn't know why, except that he's happy to be here at Libertas and help build us, continue our growth. So we have a really strong management team and underwriting team. And like I said before, please utilize myself. I'm very experienced in and around our products, how to get deals done. And I'm looking forward to really getting it in there with you guys and learning more about the clients you have, and figuring out how we can structure deals. I'm gonna just show my slide here. I'll just give you my phone number verbally so you have it in case you have any questions. It's 914-572-7795. You can see my emails up on this slide. It's david.goldberg@libertasfunding.com. You've probably seen some emails from me, some programs, some marketing. I can't control always when the marketing department sends something, but hopefully you're finding it useful, and we're going to really start to do some deals together here. Having said all that, I want to pause. I know I went on for a bit there, and just really open it up to Scotty and the floor to see if you guys have any questions and how I can be of help.
Just a couple questions popped up, David. On your revenue-based product, is that a daily or a weekly payback on that product?
So, Scotty, we actually can offer, if the cash flow is good and the credit's good, a biweekly or monthly payment on those. So we're a bit different, and that's kind of what I'm trying to stress. Is we're not your typical MCA company that is looking to do daily. We'll do some weekly payments. But often deals will qualify for better than that, and we're not afraid to do that.
And will that be the same for the term product?
Yes. Our term loan, we don't do any daily payments. It'll only be weekly, bi-weekly, or monthly. A little more apt to do bi-weekly and monthly on that product with the bank. I just want to touch while we're talking. We do have some revenue requirements that we can discuss. Depending upon the industry, it's usually about $150,000 per month. for our core industries, and it scales up a little bit depending upon the industry and the risk associated with it. So when you start to targeting clients, start thinking anywhere annually $5 million to call it 150 million, and even above that. But that's the kind of space that we're playing in.
Perfect. Do you have an onboarding process?
Yes. Reach out to myself. My phone number, 914-572-7795. My email is there, david.goldberg@libertasfunding.com. I will get you out our partner agreements for the web bank term loan product and our revenue-based product. We have a small questionnaire that you can allude to meeting me through the CLBA, and just it should ask you a little bit about yourself. We ask for a driver's license, a voided check, and a W-9 form, and I haven't had anyone that hasn't been approved for our programs that has been a member of the CLBA, so the track record is good for that. And we pay. This can be very lucrative. I also want to stress that this can be a very, very lucrative, whether it's your full-time gig or side hustle. I think it's really important. We pay on the funded amount, and like I said earlier, we pay on re-ups, renewals, the same amount.
Excellent. And that's good to know too, because a lot of other folks don't pay the same amount. That gets fractioned out as they re-up each different time. That amount gets smaller and smaller.
Totally correct. A lot of people
are,
a lot of people are paying on the net funded on the re-up.
Right.
So if you're really trying to build a stable book and relationships, keep that in mind.
Yeah, this is David. This is great, man. Thank you for coming on board and sharing this information. I greatly appreciate it. This is going to be recorded, so if anybody wants the recording, let me know. I'll make sure I get this out to everybody. You have David's contact information. You can certainly get a copy of this presentation by reaching out to David. But thank you for taking the time and joining us this afternoon, David. I really appreciate it. And I'll make sure our guys start working with you. And hey, guys, if you didn't notice, David and Libertas are different in the marketplace comparatively to some of the other revenue-based companies that are out there. And if you were at the conference, you did notice that there's only two companies that we work with through the CLBA, and Libertas is one of them, and Spartan is the other one. So those are the only two guys that we as an organization have faith in to bring to you guys to work with. So make sure you call David with your deals. They got a lot of good stuff going on over there.
I appreciate that, Scotty.
Yeah, you're welcome, David. Have a great day. We'll catch up with you soon. Take care, sir.
Thanks. Take
Bye-bye.
care.
You got it. See ya.
Yep.
Oh, who's that? Let's see here. Edward, are you there, sir?
What's up, Scott? I'm here.
Hey, how are you, man?
Doing good.
Do you have a presentation?
Good. Yeah, let me.
All right, hold on. I'm just going to share my screen with you. You should get a notification for that.
It's asking me to cover a security feature here.
Oh, yeah.
There we go. Let's see if that got the trick done. Okay, where would I do go change presenter?
Yeah, it said you should get a notification that would have you be the presenter. I don't know if you saw it yet.
No.
All right, hold on for a second. Show my screen. I'm going to do this again. All right. Are you sure? Yep. So you should get a notification to show your screen or share your screen.
Computer screen. It says deny, and then the other one's open system preferences.
You know what? It might be the firewall.
I could have a firewall.
Is it through the company?
Yeah, it's all. Yeah, but the IT department does a lot of protection on this thing. It's got the ability for the Authenticator, GoToMeeting, and Slack. It's all there, so it shouldn't be blocking it.
Okay. If you want to email me the presentation, I'll run it for you. Just let me know when to flip slides, and then I'm just going to make it back to me so everybody can see my screen, and then I'll wait for your presentation to come across. I'll bring it up on my screen, and then then I'll run it for you. This way here, we don't have to deal with the firewall. And because a lot of times it's just the firewall is too thick to get through. And, rather than waste time trying to figure it out, we'll just run the presentation on my end.
Okay. I went ahead and sent it. No subject matter. And I'll keep this one short and simple. It's our
Okay.
partnership referral form that really makes this thing condensed into a keep it simple format.
Perfect. And guys, Edward has a fantastic product. I'm kind of excited to have him share it with you guys. Just hit my screen. All right, here we go. Open. All right, can everybody see my screen? Shoot me just a quick yes in the question box would be awesome. Anybody? Yes. All right, excellent. So I'd like to introduce Edward from Unlox. I've known Edward for, my God, Edward, when did we first meet? 10 years ago? It's been that long.
A decade. It sounds good just to say that, a decade plus.
Edward stepped away from the industry and then came back in and made a call to me, and now we're working together again, which I was super excited about. Edward's going to talk to you about supply chain financing, which one of my former careers when I was at HSBC, that's what I used to do with supply chain financing along with business banking, which was amazing in my world and very exciting. So Edward, I'm going to turn this over to you and let you talk to everybody. And folks, if you have any questions, shoot them in the question box. I'll be glad to bring them on and you can speak with Edward directly.
Hi, everybody. My name is Edward Puerto. I am the United States broker and intermediary manager. I'm in charge of boarding all new partnerships for the company Unlox as a supply chain finance company. Our parent company is Logisystems, a Hong Kong-based company that is on the stock exchange. We have provided over $200 billion in supply chain financing since inception. And we operate currently in over 40 plus jurisdictions around the world, meaning that we provide trade financing to buyers, suppliers in 40 plus jurisdictions, basically countries where if the buyer is based in one of our jurisdictions and the supplier is based on one of our jurisdictions, we can come in as Unlox and be the fintech intermediary that provides the 100% financing for the buyer in order for them to buy their finished goods from their supplier. We are expanding rapidly into a lot of different jurisdictions around the world. We have opened up Latin America, we have opened up the UK, we have opened up India, we have opened up Europe. And so essentially anywhere that the importer or the buyer is in our jurisdiction can essentially go through us and have 100% of the financing provided to the supplier minus our fees. And so I'm going to kind of transition everybody from kind of the business loan space, the merchant cash advance space, kind of into our world here, our supply chain financing, as we feel that there's an ecosystem in the United States with a lot of intermediaries, brokers that may be marketing business loans and merchant cash advances that are coming across opportunities that could fit a supply chain finance opportunity with us. And Scott, if you can scroll down a little bit to kind of get to the preliminary pre-qual questions. There we go, qualifying questions. If you can go all the way down, there you go. When you are talking to any prospect that needs any type of financing, there's 4 key questions that we've comprised at Unlox that we feel would make it really simple for you to identify if there's a prospect for supply chain financing. The first one, which I'll get into a little bit more about where this is going to change probably by the end of Q1, but it would be, do you as the importer or the buyer purchase your finished goods overseas? Question number 1, meaning if you are a retailer that buys electronics from China, China is one of our jurisdictions for suppliers, and if the buyer's in the United States, it's a perfect fit because they're buying overseas from a jurisdiction that we can provide the financing for. If they buy from Vietnam, if they buy from Colombia, if they buy from India, if they buy from the UK, there's over 40 plus jurisdictions, which I'll get more literature out in terms of those specific jurisdictions in slide decks. But we are working on domestic suppliers. So right now, a buyer, the importer, can be based here in the United States, but the supplier has to be overseas. Our legal department is working on domesticating the supplier financing side. So essentially, if you have a buyer in the United States that buys from a supplier in the United States, we can match those two trades and provide the financing. But right now, the key criteria is they have to be overseas. The next question would be, are those goods finished products intended for resale or distribution? So perishable goods, for example, we don't want to finance as those could rot. Metals, we don't do. Vapes, we don't do. There's about 5 core ones that we don't do, but everything else is pretty much fair game. Frozen seafood, we've done those transactions. So if it's somebody that is buying frozen seafood, for example, India is becoming one of the largest frozen seafood suppliers in the world. And so there might be opportunities where you have a buyer here in the United States that is purchasing frozen seafood from India. That could be a good fit, for example. And I'll again provide additional context and color on the goods that we really like to finance at Unlock. Is your turnover annually over $3 million? So our minimum revenue per year is $3 million, and that's a baseline. That certainly shouldn't be the optimal client that we're looking for. We have many clients that do 20, 30, 40, 50, $100 million a year that need supply chain financing. So 3 million is the baseline. They can't be doing below that. And we do look at their last 18 months of financials in order to verify that. So right now we're collecting 24 and 25 tax returns or audited financials to prove their turnover of $3 million. And then the last question, is the business currently profitable? Which our underwriting would also look at the financials to verify that they're not showing any losses on there. And so those are the key 4 qualifying questions for your prospect. And if they meet those, then we could take that conversation a little bit further with them and see if there's a good opportunity. The way we've created and designed the partnership program at Unlock is we have a dedicated internal account manager specialist that knows supply chain financing inside and out. Several of our team members came from Cabbage, as many of you that worked with them in the past with lines of credit. In Atlanta, they sold to American Express. We have a team, including our VP of sales, came from Cabbage. And so there's a rich fintech lending background with these individuals and also supply chain financing background. So we're really looking for this to be more of a refer and earn, but working with you along the way to complete the credit facility and the transaction for you. And so when you refer a client over, we're not expecting you to be experts in supply chain financing. We're just expecting you to identify prospects, collect basic information, and then we have a format that you can submit it in, which very soon, we're testing it as we speak, we'll have a partner portal. And that partner portal is going to be very intuitive, immersive, where you can submit your referrals. It will have commission tabs. It will have a marketing library. It will have the ability for you to enter the leads, and you won't have to do it through email submissions like you do today. So that's in the works as we speak. But for right now, it's going to be a submission email with the pertinent information. And then if they meet these basic criterias, and I'm kind of round 1 with you, talking and discussing if it meets the criteria, then we move it to an assignment through a round robin with one of our account managers that will work with you in tandem in order to see if we can approve them for a credit facility. And then we will provide you first, if that's what you would like, is a credit facility that we can provide. And then we can present that to your buyer. And if the buyer accepts it, then we would move to obviously getting in touch with the supplier or suppliers. A lot of them have multiple suppliers, China, India, Vietnam. They're buying from multiple resources. And then we would get in touch with them directly in order to facilitate the tri-party agreement, which would be between Unlock, the buyer, the supplier, and we would take assignment, obviously, of those accounts payable, the invoices that we would be financing. Our terms go out to 120 days. And we don't do weekly or monthly payments. It's one payment due at the end of our term. And so what the value is of companies like Unlock that provide supply chain financing to the buyer is, quite frankly, we're providing time. Time is the value. Instead of the buyer having to pay upfront to receive the finished goods, or even if the supplier provides 30, 60, maybe even 90-day terms, we're going out to 120 days. And then our fees are typically on average 1.4% per 30 days. So if you compare that to merchant cash advance, business loans in the space, you can see the benefit of utilizing this product either in conjunction with or exclusively if they meet the criteria, because the cost is very minimal for them to do this. And so how we do the transaction is we provide 100% financing to the supplier minus our fees, and then the buyer would then negotiate with the supplier the difference between what we're providing and the fees that they would still owe to the supplier. We provide the financing when the bill of ladle is provided, and so once we have that shipment proof, that's when we provide the financing to the supplier. And then we are using COFAS as an insurance policy on the back end, so larger transactions we will be running through them and we take care of the premium on our side. We don't pass that along to the buyer. And that's going to allow us to approve more, approve a higher credit limit. And so that's happening seamlessly on the back end to help get larger credit facilities. We just had one particular deal that we approved for $1.2 million, where COFAS approved for $1 million. We were very comfortable with the deal and we raised it to $1.2 million. Also with payment history, after we complete it, we will go higher as well in credit facilities for the buyer. So once we have a good solid payment history and they're paying us as expected, that can be expected for your clients. Let's talk a little bit about what I think is really important on this call as well, and that's what is in it for you, right? What type of commissions, revenue, income can you make? What's the opportunity size? We do have a calculator that we created that I can also share with Scott, and we can get that out to everybody on this call afterwards, which really lets you plug in numbers and let you see the revenue opportunity marketing this product. We pay a 20% rev share over 5 years, and that's in our introducer agreement. And so when you become a partner with us, you sign an introducer agreement where Unlock is offering you a 5-year 20% revenue share on that client. And the reason that we feel rich about doing that is because most of these clients don't do this one time. Once they find a company like ours that can come in and provide this, they're constantly ordering from their suppliers, right? They're always ordering, and so they always need some type of financial outlet in order to purchase this for them. They typically will stick with you for the long. And so that's why we feel comfortable paying over 5 years. And so how the 20% revenue share works is the 1.4% per month. If we go out to our 120 days or 4 months would become a 5.6% fee as an example. And so let's say that we provide $1 million financing credit facility for the customer and our fees are 5.6%. You're looking at, $56,000 in fees that we would collect as a company for providing that. And then you would be getting a 20% rev share of that $56,000 or $11,200 on that particular fee structure on that customer. When you start stacking customers and you look at our calculator and it breaks it down how many customers you stack, the residual opportunity becomes immense. And so this is more of a back-end residual buildup than a front end, as many of you may earn on the business loan merchant cash advance side. This is a great cross-sell opportunity, a great product to cross-sell to existing clients you may have that fit the profile that we're looking for, or new clients that you uncover that you present this to, and you really can build this up nicely over time. And so that's the revenue share part that Unlock is willing to offer you. Very competitive. I've heard 10%, 15%, we go up to 20% rev share. 5 years is very attractive. And so you're locked in there with these customers every time that they're borrowing from us, which is a really nice feature. And then again, the partner portal will be transparent, visible. You'll see your commission structure. And in the interim, we'll be emailing that to you on a monthly basis. And so that's the commission side of marketing this product. We are looking to purchase finished consumer industrial goods. So on this slide, it shows you apparel, electronics, toys, home goods, beauty products, medical equipment, auto parts. Those are very familiar type of products that we're purchasing and financing for from these buyers. And again, kind of the value to the customers, the extended payment terms. I mean, this is all about freeing up their liquidity, giving them 120 days to pay it back instead in 30 days or 60 days or right up front. They don't have to pay a hefty deposit to the supplier to get their goods. They can utilize a company like Unlock to be able to come in and provide the financing at 100% level, minus our fees. This is off balance sheet financing. It's not a loan. There's no dilution. We don't file UCCs. It doesn't encumber them. They can take other financial products into account without having to worry about this being a balance sheet issue for them, which is a very nice feature. And then they build stronger supplier relationships, which means that, you know, they could probably get discounts from their suppliers by buying in bulk and having the ability to utilize our company in order to provide the financing. So benefits all around, both for the supplier, for the buyer, for you making the revenue share of 20% over 5 years. And so it's kind of a win-win-win across the board for everybody.
Off balance sheet is amazing. I didn't realize your product was off balance sheet, Edward.
It's off balance sheet. Yeah, we don't uncover anything. We don't report that. There's no personal guarantee. There's two things that I get asked a lot. Well, how do you insulate yourself from defaults or losses? It's really simple. Between COFAS, which provides the insurance, and the tri-party agreement, which does the assignment of the invoices, we feel pretty secure in doing those two. Plus, we have, you know, a really good risk and underwriting department that evaluates the financials and the ability to provide the facility for the customer. We like to see trade history of 12 months. And so there's already a history with this customer already doing this with their supplier in terms of trade history. So it's not somebody brand new. Another question that gets brought up a lot, do you do PO financing, which is more of providing the financing before the goods are shipped? And the answer to that is no, not at this time. So we are financing the supplier once they provide the bill of ladle and the goods are shipped. And so that bill of ladle becomes critical to us unleashing the financing to the supplier at that point. So that there's a difference between, and a lot of people call supply chain financing different names: reverse factoring, trade finance, supply chain finance. I mean, it's all the same thing at the end of the day. But it's a multi-trillion-dollar industry. Internationally, it's very common. Asia, being where we're based out of, is a corporation. It's one of the largest markets in the world for supply chain financing and exportation of goods. So it's no mystery of why we are based out of there and move from east to west. And so we're growing rapidly through opening jurisdictions. And the United States holds hundreds of thousands of customers that we believe could be identified as an opportunity. And we are looking for partnerships like yourselves that are already providing some type of financial product or service to your customer base and prospects. And we think this would be a great cross-sell for those customers that you already have and prospects that you may come across. I think the education has been the big piece for that. And doing a little bit of studies on my side, it doesn't seem like, especially in the merchant cash advance business loan space, for example, a lot of people really know about this product. And so, hopefully this brings more light to another opportunity to make revenue.
Excellent. And what are the product type, again, is the apparel, electronics, toys, home goods, so on and so forth. Is there any particular industries that are industries you want to stay away from, or are there any industries that are really hot right now that this product would fit really well into?
Yeah, so that's a great question, Scott. Retail's big. Any retailer out there that, especially during the holidays, they're buying bulk, maybe electronics, for example, that's really popular. Anytime, you're getting into any kind of holiday season where they need to buy, in bulk, and they need a company like ours to come in and do those purchases. E-commerce, obviously is a really nice one. Anybody that's, selling their products or good as a wholesaler, on Amazon, for example, manufacturer, anybody really that buys anything overseas at this point is going to be a good prospect and industry for us.
Excellent. All right, good. That was the only question that kind of popped up so far. Is there any other questions out there, folks, while we have Edward?
I'll go over the 5 top industries just so everybody kind of is aware. That might help. Retail, manufacturing, apparel, food and beverage that are non-perishable, toys and gaming. Those are really the top ones.
Perfect. Can I share this? I can share this document with all of our brokers, correct?
Everybody, absolutely.
Yeah. And do you have any other marketing collateral that our brokers can use, or should they just use this and kind of make it their own?
I think this would be a really good, simple one, but I also am going to share some other documentations after this call with you that will be, number 1, the predictions that we're in, and number 2, the commission revenue calculator. There'll be a slide deck, and there'll also be a revenue calculator. I think those 2 would be excellent to share.
All right, perfect. That's great. Anything else out there, folks, while we have Edward? Nope, those are the only couple questions we had. That was great. Edward, this is awesome. I really appreciate it. This is a really good insight. I learned some stuff just from what you shared that I didn't know before. So I'm excited about this, and I'll share this information. I shared the information with you before about the folks that are on the call, so you can reach out to them directly. But again, folks, this is recorded, so I'll be happy to share this with you. Edward, do you want to kick off your contact information real quick so everybody has it, and I'll make sure they get it also.
Yeah, absolutely. So my email is edward dot, my last name Puerto, P as in Paul, UERTO at Unlock, UNLOQ.com. And that is an email.
And yep. And I'll make sure everybody gets that also. Again, if you guys want a copy of the recording and the document that's on the screen, shoot me an email or text me your email, and I'll make sure I get all that information to you, and I'll make sure I get you Edward's email and phone number also if you'd like that. All right, well, that's great, man. Well, thank you, sir. I appreciate you taking the time today and coming up, taking the time and presenting on the webinar series today. We'll be talking again throughout the course of the year, and I know that our folks will definitely be calling you because this is a pretty unique product, and it's pretty cool in the marketplace, I think, anyways, because this is stuff that I enjoyed doing when I was with HSBC.
I appreciate that, Scott. It is definitely a niche product, and Unlock, obviously entering the United States for the first time, it's really niche as far as we don't have a lot of partnerships right now boarded, so we're looking to board a lot. And happy to board anybody on this call that wants to start referring business over. Feel free to email me, and I'll get you boarded and started right away, so you can become a partner with us.
Excellent. Well, thank you, sir. Have a good afternoon. I appreciate you.
You as well. Thanks, everybody.
All right, thanks everybody for tuning in this afternoon. We'll be back next week with 2 new lenders and another couple of great presentations. Everybody have a great week. My cell is 585-455-2985. If you guys need anything, feel free to call or text. I know you have my email. Feel free to shoot me an email also. Have a great afternoon, everybody. We'll talk soon. Bye-bye.